got questions, we've got answers, we have the man to answer them. Jeffrey Levine from Buckingham Wealth Partners. Jeffrey, welcome back to another episode of Ask the Hammer.
Great to be back with you, Bob.
Great to have you here because the inbox is full. Many questions having to do with the American Rescue Plan Act of 2021, ARPA. I guess some people refer to it as.
Yeah, we could go with ARPA. I like ARPA. That works.
All right. So this question has to do with something described as the premium assistance tax credits. And the reader would like to know what changes have been made to that.
Sure. So there are two key changes to the premium assistance tax credits. The first is simply a change to the way the premium assistance tax credits are calculated for the next 2 years, for this year and for next year. And the biggest changes will probably be felt at both the lowest incomes and higher incomes, with the middle seeing changes, but perhaps not noticing them as much as they would have otherwise. And the reason those changes at the lower end and the higher end will be more noticeable is because they are clearly more noticeable changes. That the lower end, you go from paying something to potentially paying nothing. Premium assistance credits offsetting the full cost of your plan. Now, this is all tied to the regular second least expensive silver plan rules, et cetera. So the exact credit varies by location based on what plans are available. But that if you have up to 150% of the federal poverty line income for your particular household, that second least expensive silver plan or less expensive plan will be completely free to you. Paid for, of course, by the credits. Now, at the upper end, it used to be that individuals with income in excess of 400% of the federal poverty line received no premium assistance tax credit. So there was kind of this cliff where if you went from 399% of the federal poverty line income to 401%, all of a sudden just breaking that bound, you went from having potentially a reasonable credit to having no credit at all. Well, under the current rules for the next 2 years, there's a limitation on how much those individuals can spend on their premiums, like 8.5% of their income on a policy that would work there. So those are the big changes for this year and next year. Now, for those who received credits last year, there's a notable change there, and that's simply that if you were overpaid credits, those are generally clawed back, or you have to pay them back, if you will, on your tax return. For last year in 2020, you won't have to do that. So it alleviates some of that cash flow crunch that individuals might have felt now.
Right. And obviously there are times when people have done things like Roth IRA conversions and find themselves in a position where they had to pay back some of that credit.
Absolutely. Yeah. This is, anytime people add income or reduce income, it's important to look at the full picture, not just what bracket you happen to be in. The bracket helps to tell us what your rate is, but your true rate is the cost that it was before, and then take the cost now and then figure out how much more is that and divide it by the income, right? In other words, take everything. There are some places where I've talked to people and they've lost huge property tax breaks because of their income. And that, in my mind, is an income tax cost. Even though it's a property tax because their income was too high. And that can be controlled. Now, the premium assistance tax credit, as you note, is a really important one. But perhaps the penalty or the hardship of converting a little bit too much this year will be a little bit less heavy in 2021 and 22. Thanks to that new unlimited amount of income to cap yourself at 8.5% of income. Now, of course, if you have more income, the 8.5% of whatever your income is a higher dollar amount. So you effectively phase yourself out over time as your income increases, just because there aren't policies that cost enough money to exceed 8.5% of your income. But it's a much more gradual phase out. No more hard cap at the 400% poverty line.
Right. And I think it's important. I think you mentioned that this is in place for 2 years. And so after that, it returns to what it was before.
It's a good question. It wouldn't surprise me, given that this is a tax credit and can be moved forward through on a reconciliation bill. It would not surprise me to see that extended under a later tax bill this year, and the infrastructure bill that will likely be paid for through tax increases, et cetera, the more comprehensive tax reform that we are all expecting. I would be very surprised, candidly, if it didn't extend that. But as of today, what the law says as of April of 2021 is that this is a 2021 and 2022 deal.
All right, Jeffrey, as always, nailed it. Answered that question for our reader and many others.
You, sir. Yes, and if you have a question, if you're looking for an answer to your question, you'd like to see it here, give us a shout. Email us here at askthehammer@buckinghamgroup.com. Again, that's askthehammer@buckinghamgroup.com. Thanks so much. We'll see you soon.